Hello traders, welcome to another daily analysis. Today is January 24th. We are right at 5:41 p.m. Eastern Standard Time. So let's just take a look at what happened today. First of all, yesterday we had the Japanese flash manufacturer PMI in Asian session. That came out very positive. Actually, it was the fastest expansion in almost 3 years for Japan. So of course, that's a positive news for Japan and for the Abe economic strategy. However, doesn't really change anything for the currency. Japanese yen still remain a very undervalued, very devaluated, basically very negative currency to sell. You will only buy it in front of a risk events for a safe haven effect. So it doesn't really change anything, but just give you a sort of hint out because they are going to have their rate meeting from Bank of Japan very soon. So really don't expect they to cut the rate. But that also means that if they actually cut interest rate or have a further bond buying program, things like that, if they actually ease more, will be a very good catalyst to sell Japanese yen. So this kind of thing would just give you a foundation of what's the expectation of the market right now. So when you read this kind of headline, you ask, yeah, what does that mean for my trading? Basically, it lays out the general belief for the market. So you read this kind of headline saying that, okay, it does look like the Japanese economy is turning, is kind of recovering. So that's why when any catalyst in the future that comes out in the opposite direction for this kind of headline, will be a good catalyst to sell. So speaking of that, what happened today, the main event, of course, is the High Court ruling for UK. Now, before the ruling came out, we have a series of flash manufacturer PMI and service PMI from France, Germany, and Eurozone. Now, the PMI number was largely positive. So it really shows that the Eurozone basically started the year with a very solid number. And that also shows that we have continuation of doubts over ECB's easing policy. And that's why a lot of economists from Germany are really opposed to the ECB right now. And they want ECB to basically stop this low rate interest rate market as soon as possible. Now, since ECB is not willing to do that, so you would really expect to still see euro as a fundamental weak currency. But because of the solid data from Eurozone, that just shows you that euro does have a very good sentimental strength for you to trade day to day or in the intraday perspective. But that also tells you the only biggest risk, as we mentioned at the beginning of this year, is the political situation. So really for Eurozone, the economy is picking up. Of course, it's largely due to their low currency, which boosts their economic activity. But the biggest thing that's going to shock the market for euro in 2017 really lies down to the three major elections of France, Holland, and Germany. So those political unstableness will be the biggest risk for euro. Now, during the session, of course, the High Court ruling for UK came out as expected. It was a favor for the parliament. So what happened right now is that the Brexit, what we call the hard Brexit, suddenly became very, very soft. Now, why do I say it? Because right now, they really have to go through the parliament to trigger Article 50. You have, of course, a portion of people anticipated or hope the parliament to never trigger a lot or just to completely ignore the referendum. So just say, hey, it never happened. We are still in the Eurozone. I don't think that's going to happen because that's really against the constitution. Eventually, and the parliament already say this, they do support the referendum. They are going to trigger Article 50, but you have to understand the parliament politics, because right now, I don't think any politician wants to bear that kind of burden. So really, I do think they will just try to drag it out, or at least just make it as smooth as possible. So that's why I think the hard Brexit has suddenly become very soft. Now, this, of course, become a very strong sentiment for British pound. Last week you have Prime Minister May's clarity on her Brexit plan, whether it's a good plan or not. At least there's no uncertainty anymore for a time being. This week you have the ruling. So right now, if you look at the future for British pound or for UK, this uncertainty, the element of uncertainty suddenly dropped significantly. So really, yes, the future is still uncertain. Yes, we still don't know what's the future for UK after they leave Euro, but at least we know more than we were. So we didn't know anything before, now we know more. So that sentiment itself has supported British pound tremendously, and that really was the driver for British pound right now. For Euro, it's the same story because of the positive data, and the ECB basically came out last week saying that no, their policy is still the same, at least until April or December of this year. That also basically removed the uncertainty and further support Euro. But if I have to choose, I will think British pound has a better sentiment, because Euro, you still have a lot of political uncertainty. You still have the Greece debt issues. You still have, this populist movement, France, Germany, Holland, and Italy. So these things are also playing, headline time to time. So British pound is really the strongest currency for the time being. Other than that, in the New York session, we have the flash manufacturer PMI from US, which was once again a positive data. So really looking at data-wise, fundamentally speaking, US is doing very well, and real risk is really lies down to Donald Trump's protectionism. Today, the equity market actually surged higher in both European and US market. That just shows you that the investor basically, yes, for time to time, you have the risk events. It's not really a risk events, but you have this kind of negative sentiment from Donald Trump. But if you look at the time, it basically takes 3 to 4 days for the market to digest that. Once they digest it, they will revert back to fundamental. You gotta understand that things always revert back to fundamental once the sentiment dies down. So that's what happened to the US economy or the global economy right now. Last Friday we have sort of a negative sentiment because of inauguration, and Tuesday, soon today, we actually reverse that, and everything become positive again. So that's just how fast the market nowadays to digest this negative sentiment. So if the market can digest the negative sentiment very fast, then you can still resume back to trading the fundamental. So US dollar remain to be fundamentally strong. I still don't like to trade it during a day-to-day prices unless I have a very good signal. Now the reason is because we still has a lot of negative sentiment from day to day, which is basically is unpredictable for US dollar. So you don't know what Donald Trump is gonna say tomorrow or what he's gonna do to really completely rattle the market again. Now in that kind of situation, market can really go up or down in a daily basis, which is kind of hard to trade in facing that kind of situation. Same thing applied to Canadian dollar. Canadian dollar surged today. There's two reasons. First, of course, over the weekend we have positive news from OPEC, but also today the market generally turns a risk on sentiment to give a positive sentiment. Now, third reason is that Donald Trump signed an order for Keystone Pipeline and North Dakota Pipeline. Now, those two pipelines basically is largely benefit for the Canadian oil producers, because the pipeline can connect the oils from Canada, from north all the way down to the south of Gulf. So that's really benefit for the oil producer in Canada. Of course, further support the oil industry, further support the Canadian dollar. So that's a positive news for Canada. But as I say, you have a lot of people are opposed to these two pipelines. You have the Aboriginal Native American groups of people. You have the environmentalists in US. So it's just expect it's going to be a lot of riot. It's going to be violent protests coming up through the days. That's what I think. So that's going to play a lot of uncertainty. So that's why I say for US dollar and Canadian dollar, it's kind of hard to trade in a daily perspective, because this kind of sentiment news does change the direction. The more certain thing, at least for this week, is more lies down to Euro and British pound. WTI climb up as mentioned today, but not much movement because the Canadian dollar really goes up, really went up today from this North Dakota pipeline and the Keystone pipeline. That's really the major driver. But the equity market turning around, that's also helped. gold lost about $7 today, you know, and yield, year's yield going up again. All those are just correlation of, you know, shows you a sign of pretty good risk on sentiment. So current strength for me, it really lies on Euro and British Pound. Japanese yen, Swiss franc, again, it's hard to trade because it changes day to day. You can trade them in front of a major risk event, but aside from that, they are kind of, you know, reactive to a sentiment. So for example, today you have a risk on sentiment that of course is going to pressure Japanese yen and Swiss franc. Another short currency will be Australian and New Zealand. Now, Australia and New Zealand continue to outperform all other currencies due to their, you know, political stableness, their economic neutrality, and also the high commodity price in both iron ore and the dairy price all helped Australian and New Zealand, these two currencies. Now, later on in Asian session, we will have the CPI from Australia. That's going to be a turning point. It's either going to boost Australian dollar further or it's going to turn it around. Now, the reason is because Australian did not really have a solid economic data. If you're looking back from the retail sales, from their CPI, or even from their GDP, it was all not that well. So it does not have a fundamental strength. So really all this rally, you probably read the news saying that Australian dollar has gained about 5%, 6% in 2017 already. All this rally is really due to the absence of US dollar, the unstableness of US dollar, and the high commodity price from Chinese demand. That can shift anytime. So basically, I'm trying to say is that they don't have a strong fundamental. They don't have a strong foundation to support the currency. Yet they climb so high. That also means that once the sentiment dies down, once everything revert back to the fundamental, they might also fall down very fast. So that's what I'm hoping to trade for tonight. If the CPI turn out to be a negative deviation, I will sell Australian dollar. Which pair I'm selling, I can actually sell Aussie dollar. Now, the reason I choose Aussie dollar is because that's the one that's really overbought. And today, since we do have the new fresh sentiment to support US dollar, so Aussie dollar will be a good one to sell. Of course, you can also sell Euro Aussie. You can also sell Pound Aussie. The good thing about selling Aussie dollar, of course, you have the fundamental in your side. But Pound Aussie expected to react the same way if we have a negative sentiment from Australian, from the CPI upset. Now, if we, on the other hand, have the positive CPI number, then I will pick Aussie yen. I'll pick Japanese yen is because right now US dollar, Canadian dollar, Euro, and British Pound, they all have a pretty good sentiment. So I want to pick something that's really play into the risk of sentiment. That would be the Japanese yen or Swiss franc. So I will buy Aussie yen if we have a positive data from the CPI in Australia later on. So that will be a trade plan for tonight's risk events. Other than that, the market is still react quite, in accordance with the risk sentiment. So I will take a look at the 28 currency pair in our daily chart right now. Other than that, tomorrow, let me see what we have tomorrow. Tomorrow, the risk event is Wednesday 25. We don't have any risk events tomorrow until New York session. You have the crude oil inventory, so that's going to be a major effect for Canadian dollar. Again, you can trade that. I personally don't because it's too much information to digest. But I do take a look at that and maybe buy after the risk events. At 4:45 p.m. Eastern Standard Time, you have the CPI data from New Zealand. So that's also going to be, again, same picture as Australian dollar. That's either a turning point or it's a further boost for New Zealand dollar. I'll see which pair to pair up with. But most likely, you can buy New Zealand in front of a good data and sell Euro New Zealand. Buy Euro New Zealand or buy Pound Aussie in front of a negative data. We'll see what happens to US dollar tomorrow or to the general risk sentiment. But let's take a look at our current trade. So today I did trade through the risk events. I mean, I'm planning to trade it, but I did not get feel. So Just to show you what happened, this is, Sunday open January 23rd, 22nd. So Sunday open, 6 o'clock. This is cable. So you have, continuation of climbing up basically from 123.70 all the way to 125.38. So that's almost 150 pips, 160 pips in about a day, right? So it keep climbing up until the 24th midnight London station. You have this kind of setting. Doesn't really have anything basic in London station. And finally, this candle, as you see, goes up and down. This is the result of the High Court ruling. So I trade through it, and it reacted exactly as a textbook buy rumor and sell fact. So after the ruling, you have initial spike of about 25 to 30 pips, really nothing much, and then you have continuation of drop down all the way until 24.18. So this is again a very typical textbook result. And I put a pending order, but unfortunately I did not get filled because it did not go as low as I wanted. I put this Fibonacci chart, just from the beginning of the surge, from basically January 20 goes up to here. So I was hoping it goes down to at least 24 to 23.50, which is a 100-day moving average, to basically fill me in this kind of zone. It didn't go as low as I hope, but it does react as I say, a textbook reaction. It goes down a little bit after the news result. It's as expected. We have an initial spike of 30 pips, and it goes down for whatever reason. It could be profit taking, it could be buy rumor sell effect, and only to climb up later on. So what's gonna happen here, I don't know, because 25.50 is a sort of a handle, quite important resistant area. I do think it's gonna keep going up, but because of the strength of US dollar, it might pressure cable a little bit. We'll see what happens. I'm going to cancel my order for now, just because it's I'm already past the risk event, so for me to keep hanging on to this pending order has no meaning anymore. But it's just an interesting thing to show you. That's really how the market always react, in kind of buying the rumor, selling the fact. So you don't need to trade this way, but you definitely don't want to get sucked into this kind of thing, because like whoever is buying here are really the biggest loser. They got very excited, say, oh wow, the High Court ruling is in favor for the parliament, I'm going to buy pump. Well, guess what? You are the biggest loser because you're buying at the top. So you basically are making other people money. For people who want to exit the market, they sell their British pound to you. So that's what happened. And people who are buying here are more smart. You can wait for it. And that's why you can really don't need to trade at the risk events. You can always trade afterwards if you understand how the market react to a certain catalyst. You can always get in later on. You can even get in at 4 hour. Definitely a more risk-free, more simple way to trade. So yeah, I could put, if I had put my pending order at here, which is a nice 24.25, which is a quite nice area of support and resistance, I will get filled. The reason I don't do that is because I just don't know how much effect it's gonna be. Because last week, from the Prime Minister May's speech, you actually have this kind of effect, which is crazy, right? It's really highly emotional. But the thing is, you never know how the market is going to react. So if you trade after a candlestick, after hour or 4 hour, when you have this kind of clear signal, you have a higher probability. If you don't wait for a candlestick signal, you just put pending order at a certain zone, you will have a better field, but you have a lower probability. And that's just really, there's nothing good or bad about it. It's really depending on your own risk appetite. For example, if you put a trade today at this area and then you just leave your desk, you say, okay, I'm going to put my order here so that it fill. Then you will be a winner today. To get it, you will get it filled and actually making money right now. But a story might turn around. It might penetrate to continue go down until 100-day moving average here. Then if that's a scenario, that it's really depend on how large is your stop loss. So that's why because I'm using pending order today, I don't want to risk that. If I'm trading through the market, if I'm waiting in front of the market, then yes, I could, go to a shorter time frame, waiting for some sort of candlestick confirmation like this green candle to know, okay, now the buyer has regained strength, now I can buy here. But because I was not doing that, so that's why I don't want to put a pending order at such a high level. Okay, so that's just one of my intraday trade today. Speaking of that, let me cancel my order first before I forget. So let me cancel my cable. Just give me 1 second, please. Okay, so cancel my order. All right, so take a look at our daily chart. Right now, I still have this Euro Newsy in my chart. And as you can see what happened, basically, like I say, we are actually going to this kind of sideways movement. We are edging lower, but really nothing too significant because, there's no space here. Everything is just basically congested together. So really nothing much happening here. You do have this major support at this area. So we have to see what happened later on to the trade. Don't forget, tomorrow we do have the New Zealand CPI data that's coming out tomorrow. So that's going to play a fact to our trade, and that might actually either help us or hurt us. But either way, I'm still in this trade for the reason because New Zealand dollar, as for now, is still stronger than Euro dollar. So I will still hold it and see what happened further down the road. But other than that, that will be my plan to do it. So let's take a look at our 28 major pairs. So let's take a look at Euro Pound first. Really nothing much going on today. You still have this congestion of candlestick, basically going to the range market, and the simple reason is because they both are quite strong sentimentally. So really nothing, not looking to trade. Euro Swiss, same thing. You have a little bit edge higher, shows you some good strength into the euro. If you go to Euro dollar, it's again continuation of climbing up. You actually, also today's a red candle, but you actually going higher high. If you do look at it, yesterday you actually at 1.0769. Today you actually 1.0774. So not much difference, but it does climbing up. So it shows you that buyer is still trying to penetrate it. Of course, the US dollar strength has diminished the euro strength today. That's why you have this kind of a small candlesticks. But we'll see what happened. I do looking to basically buy it for in a daily perspective, but if we does goes to this kind of a significant area of 1.0850 or 1.09, then I can take an advantage to sell it because again things will revert back to the fundamental eventually. So if we do have a certain catalyst to push this higher, then I can take advantage to sell it just for the reason that US dollar is still fundamentally strong than euro. So we could do that, but we have to see what happened. Euro Aussie on the other hand, really not much movement today. So we'll see what happened. Right now it's 6 o'clock. We'll see what happened later on to the CPI data from Australia to see if again that will be the turning point, and we'll see what happened. Eurocast, same thing. You have a Canadian dollar strength today to further push down euro. Euro Newsy, same story. We will have to see what happened tomorrow to the CPI data from New Zealand. Euro yen continue to sort of going up and down, up and down. It's really, like I say, depend on the risk sentiment. That's why I say it's kind of hard to trade it without any catalyst. You just have this kind of range movement right now. Pound Swiss, really nothing much to talk about. British pound is something I'm looking forward to buy, but definitely wants to have a good signal, or at least have a good area. Cable, I do like to trade it, to buy it, but same story as euro. If we have cable climbing up to a major resistance, such as 28 or 28.75, 28, or even here as 27.50, these are all very, very major resistance area. So if we have this kind of area really shows up accompanied by a nice candlesticks, it's definitely you can sell it, because again, things will revert back to the fundamental. And British pound, although has a pretty good sentiment, I highly doubt that it will climb up to 1.3. It really will have to have a very strong reason to goes to 1.3. You have to have a very strong reason for British pound, and you also have to have a very negative reason for US dollar for it to goes to 130. Otherwise, anything below that, this whole zone will be a good area to sell. Pound Aussie, same story. We'll have to see what happened to Australian dollar later on. Pound CAD, it's exactly same story here. Pound New Zealand and Pound Yen. So if something looking to buy, maybe Pound Yen will be a good pair to buy. Now look at that. We do have this is a nice bullish candlestick today. The only thing, and I do like to buy it because British pound again have a strong sentiment, and Japanese yen on the other hand has a sort of weak sentiment. Now I think why I don't want to buy at here is because this 200-day moving average. Now this is a very strong resistance area. Not only the moving average. Just look at, you have candlestick here, you also have candlestick here. It just diminish the strength of British pound, because you do have buyers who are buying it for the sentiment. You also have equal amount, or perhaps even larger amount of seller who are really constantly waiting to sell British pound at an even better level. So that's why I don't want to get caught up in that kind of seller area. So if I buy here, really the upside is capped while the downside is not. So I don't want to get into that because of that reason. Swiss franc, Japanese yen, really nothing to talk about in this pair. Dollar Swiss, as mentioned, we do have a reversal signal today, right here, just right above the 200-day moving average. Not a good enough. It's not a good enough signal for me to get in. And for US dollar, I really don't want to buy it because everything can change from now on, day to day. Pound yen, some people say, hey, this is a nice double bottom, and it is a nice double bottom, but it's just kind of too fast for me. A double bottom, I do like to see it goes down, goes up at least for a couple days, even to a weeks, and it goes down again. That would be a more significant double bottom. This, it's more like a range, right? So for me, again, I'm looking at the fundamental or sentimental side. First of all, I don't have a good signal to get in. Second reason is because the sentiment for US dollar is really unstable, at least for this week, for the first week of Donald Trump. So I do like to wait a little bit before I jump into any dollar trade. For daily perspective, Aussie Swiss, Australian dollar still perform very well. However, everything could change tonight if we have a negative CPI data. So we have to see. That's basically what you see here. A doji movement today. Take a look at Aussie CAD, actually a downward today. Aussie New Zealand, actually it worked basically in this candlestick, so it does come down today. But we have to see, definitely, if we have a positive CPI later on, this thing will revert and continue to go up. On the other hand, if you have a negative CPI, this thing might not go anywhere because you also have the New Zealand CPI tomorrow. So that's why you have to take into consideration. So again, wait for the major risk events, then we'll have a more clear picture for Australian dollar. Aussie yen, same thing, a nice solid green candle. CAD Swiss, CAD really turned around today, basically. CAD yen really turned around. Now, the reason don't want to do anything, it's because the uncertainty is too large for me. I don't have a certainty of direction for Canadian dollar for the time being. But speaking of that, look at dollar CAD, it actually dropped even lower. So again, I'm really happy I got out of this trade last week. this two red candle is just for me, psychologically, to make money only to lose it, even though it's an unrealized profit. But unfortunately, in our mind, we do calculate those unrealized profit as a realized profit. And for me, yes, it's not healthy to do it, and definitely I tend to not look at my account in terms of money perspective, because it does affect us. And the reason is that our brain cannot really differentiate, sort of unrealized or realized profit. So maybe your dopamine already kicks in when you see those unrealized profits. So for me, try to avoid that. It's really don't make myself in a position to lose my unrealized profit. But that's really the artistic part, because if you set up your stop loss, or if you take your profit too fast, you basically put money on leave money on the table. If you don't take your profit, that the trade keep going up, eventually it's going to come down and take away your profit, which will be also very painful. So understand yourself, understand how you react to certain psychological reaction in the market is really the number one key for you to succeed in trading. Take a look at New Zealand Swiss. Again, keep going up for New Zealand. New Zealand really is the strongest currency. It's even stronger than Australian dollar. And if we don't have the risk event, then of course, I would be interested to buy New Zealand. Nice solid green candle today. New Zealand dollar, I need another signal to get into it. The New Zealand CAD, although a reversal signal, is not something I will sell it. So that will really leave me with New Zealand yen. But because of the CPI from New Zealand tomorrow, I don't want to get into a daily trade right now. I will do an intraday trade. I'll see what happens to the CPI data from New Zealand for tomorrow. Okay, that's it for now. Later on, again, the Australian CPI, you can trade it, but please trade it only if you have a surprise result. And I believe I have those result written down on my sheet. If you want to take a look at it, you can revert back to yesterday's risk analysis. I think it's here. Yeah, so I have all the CPI data here. Again, you want looking for, first thing is everything to be congruent. You don't want a mixed result. You want a CPI quarter, year, trimming CPI quarter, year. You want everything to be either positive or negative. That's the number one key things to trade risk events. You want everything to be congruent. Then you want a sort of surprise. It doesn't matter which one. You just want one surprise that's outside the maximum number. If you want to trade negatively, then you want everything to be negative. Then you want at least one negative surprise more below the minimum number. So really, that's how you trade risk events. Again, you don't have to trade at the risk events. You can definitely trade post the risk events. That's another way to trade it. Other than that, that's it for me for today. I will be back tomorrow with another daily analysis, and let me know if you have any question. Otherwise, I'll see you tomorrow. Thanks for watching. Bye bye.